Well, the hot stock of the week last week was Gamestop. Many of you may have traded it, but are you aware of the risk factor for hot stocks that brought GameStop down on Friday? I'm going to explain what that is and give you some things to think about for the future direction of the stock. Of course, I'll do my regular weekly market analysis, and then at the end of the video, we'll look at the trade of the week on GameStop. It's all coming up in this week's Stockscores Market Minutes. All right, so GameStop, hottest stock of the week, had a number of days last week when it was the most actively traded stock, and with making huge moves both during the regular trading sessions, but also in the pre-market and post-market trading sessions. The problem was on Friday, a lot of people buying the stock in anticipation of a live stream on YouTube by the meme stock master Roaring Kitty kind of fell short. The stock sold off at the open because before the market opened, the company announced weaker than expected earnings and what's called an at the market financing, ATM, which is a perfect name for it, ATM, because it's really the company pulling money out of hot trading activity with a financing. So let's talk about that first. The weak earnings was really not unexpected. The company had pre-announced those earnings a couple of weeks prior. What was a surprise, though, is that they weren't supposed to announce earnings until June 11th, but they did so early. And the reason they did so early, and I'm speculating here, is because they wanted to do this ATM financing, at the market finance, where they basically put out a statement saying we are allowing ourselves to issue X number of new shares, and we can sell those shares and raise money that way. And so they announced that they were going to do a 75 million share ATM financing, which means that there's the potential for dilution of shareholders to the tune of 75 million shares. Well, therefore, if a company had 200 million shares outstanding and they add 75 million more, now you've got each share being worth less because there's more shares. Now, of course, you're going to bring cash into the company, so that adds some value. And I actually think in the case of GameStop, it adds more value than it loses. We'll talk about that in a moment. So this ATM financing is a very common tactic of companies that have a hot stock. So if you see a stock that's kind of boring and nothing's happening, then all of a sudden it trades huge volume and makes big price gains. It's got a lot of liquidity. Very quickly, these companies will often do this shelf financing where they say, okay, we're going to, issue more shares and sell them in the open market to raise money. And they're using the liquidity of the market to raise money where they might otherwise not be able to. A stock that doesn't trade a lot of volume, maybe doesn't have a high profile, it's hard for that company to raise money through a normal financing. But these ATM financings, they're basically just printing money, essentially printing shares, selling them to the public and using market action to do so. What was a surprise with GameStop, and I was surprised because I owned GameStop going into Friday, and I thought, well, what's the risk factor of holding it overnight? Because it was very hot in the aftermarket on Thursday. And my concern was they might do one of these at the market financings. But I read some news and I realized that they had just done one 2 weeks prior. And so, not even 2 weeks. And so they did a 45 million share offering that raised $933 million on the last time the stock was hot and moved up again in the last couple of weeks. So I really didn't think that they would do another one. I didn't know whether they could legally. Obviously they can because they did one. And that's what really brought the stock down. You had a lot of people buying it on speculation that Roaring Kitty, whose real name is Keith Gill, was going to make some great announcement in a live stream, and everybody was buying in anticipation of that. The stock was moving from, say the 30s, closing at, I believe, 40 something, 47 on Thursday, and then the aftermarket moving up to as high as 70, I believe, 72, 67, somewhere up there, right at the end of the aftermarket session. So it was making a big move. In fact, I believe Keith Gill, aka Roaring Kitty, was a billionaire on paper based on the closing price at the end of the aftermarket session on Thursday. Well, the pre-market session on Friday saw the stock drop down into the high 30s very quickly when that news came out about this shelf financing, this ATM financing. So the lesson is, even when things look great with these speculative stocks that are trading big volume, be aware that there is always the potential, and it happens often, that these companies will do these it sits on the shelf and it's ready to go financings. They're called at the market financings, ATMs, and they're like an ATM. You're just taking money out of the market, and they issue them. It allows them to sell shares in the open market. It increases liquidity. It can give shares to short sellers who need to cover that short. There's all kinds of tricks that go on in the market to take advantage of really the retail trader who is buying on speculation and then gets hurt very quickly. Now, with that said, I'm pretty sure that the stock would have sold off dramatically after the live stream was over. It was set to air at noon Eastern. It didn't come on until about 12:30 Eastern. And nothing really was happening in that. He goofed around for half an hour and there was no great information in that. So the stock would have, I'm sure, come down at that point anyway. The problem for people that bought in the aftermarket is the stock just gapped down at the open of the pre-market on Friday, and there was nowhere to get out in between. It closed in the 60s on Thursday and opened in the high 30s on Friday. And if you had a stop in place at 50, well, you didn't get stopped out at 50, you got stopped out at the high 30s on Friday. So lesson learned, make sure that you're aware that that's a risk factor when you're holding hot stocks. And I told my subscribers in Active Live, playing GameStop is a casino play. It's just, it's high risk. Do not put a lot of money into it. Don't put anything into it that you can't afford to lose, because these stocks are hugely volatile. I myself didn't have a big position, and I took a very small loss on it because I'd actually bought it midday on Thursday when it started to go up. So I basically got out near what I paid. But I also didn't buy a lot because I knew that it was a highly risky situation. I see people online saying that they're putting all of their portfolio into this stock. That's absolute foolish thing to do because they are so volatile. All right, so let's get into this week's market analysis, because there's some important things happening in the market next week, and we're seeing potential for a strong market move, and it's all around the Fed decision that's coming out. So we'll talk first about the S&P 500. You can see there a nice upward trend. Keep in mind that this is a market-weighted index, and so the most liquid stocks in the market are what pull this stock market higher, the S&P 500, primarily NVIDIA, which was up, I believe, 10% last week, and then a lot of the other tech names up as well. So that's a bull market in the large caps. If we look at the sort of shorter term chart, a little bit more neutral, slightly bullish. We do have an upward trend, but not great, strong momentum. You can see the last 15 days or so, it's been kind of sideways. Let's take a look at the QQQ. The NASDAQ 100, again, market-weighted index, which means the big companies, NVIDIA, Microsoft, Google, Apple, they all have the heaviest weighting, and that's pulling this market higher. Even though most stocks really aren't participating, those large cap tech stocks are pulling the market higher. And there you can see a nice bull market in the NASDAQ index, the tech-heavy index. Well, what about the small caps? And this is where we see a real divergence, but also a place where I think there is greater potential. So this is the Russell 2000. It represents small cap companies. And what you can see here is that we've got some rising bottoms building. We're sort of in this sideways pattern for the last 6 months. However, we're not keeping up with the S&P. And the reason for that is because the small cap market, and really the broad market in general, is much more influenced by interest rates. And of course, we have much higher interest rates today than we had 2 years ago. The wait, I guess, for investors is for the US Fed to start to lower interest rates. Now, we saw the Canadian Central Bank and the European Union Central Bank lower interest rates last week, and that's perhaps telegraphing the potential for the US Fed to do the same. Now, on Friday, had a strong jobs number, and it caused investors to think maybe the Fed would not do a rate decrease this coming week. So we'll see how that plays out. I'm going to show you the bond market chart in just a minute. But if interest rates start to drop, then I think the small cap market is going to start to perform after really not performing equal to those large cap tech stocks. So I think this is an important one to watch. It's not time yet because we need to break out. And if we look at the 1 month chart, you can see that we're in this little downward slide, more or less neutral over the month, but the last couple of weeks sliding lower. And I think this market is waiting for a catalyst in the form of a interest rate drop. All right, let's move to the TSX. And on the TSX, you can see this little upward trend line on the weekly chart broken this week. And that's a bit of a concern, largely because we're seeing some weakness in commodities. We'll talk about commodities in just a minute. But you can see this weakness here. So some concern in the Canadian market. And let's look at the reason why, starting with gold, GLD, which has had a really good run the last 3 months. But you can see it's starting to top out a little bit, starting to break this short-term upward trend line. If we go to the 1 month chart, you can see it more clearly. We first broke the upward trend line right here, and then we've been building falling tops and then broke down through support on Friday. Perhaps that strong jobs number an influence because the gold market really sold off on Friday. Let's take a look at oil, which has not kept up with gold. Oil has been moving lower the last 2 months. I think oil's a bit oversold, and I'll show you why in a minute. But there's your upward trend line for oil. And so what you can see is that we hit support on Friday on the weekly chart. So oil should bounce, should start to move upward to that resistance level. Let's take a look at the 1 month chart so I can show you what to watch for. Here you can see some selling pressure, but then a bit of a comeback at the end of the week. I think it's going to start to move back up into this trading range here. If we can get a break of this downward trend line next week, that'll be from a rising bottom, and that'll give a short-term signal that oil is going to try to recover from being a little bit oversold. All right, moving along, let's take a look at currencies. US dollar. I like to use UUP, which is an ETF representing the US dollar. And there you can see the strength in the US dollar on Friday. Again, that strong job number makes people think the US won't lower interest rates, which makes more desirable to stay invested in US denominated securities because the dollars or interest rates are higher in those bond market issues in the US. And so that's what helps the US dollar stay up. Will that continue? Well, we're going to look at the bond market chart in just a minute, but I do find that this little break of the downward trend line is somewhat positive for the US dollar going higher, but I don't think it's conclusive because we have this resistance level. And also keep in mind that this upward trend line was just sort of broken there. So a bit of a mixed picture on the US dollar. We'll talk about the bond market in just a minute because I think that's the important chart. But first, let's take a look at the Bitcoin chart, which has been moving up for the last 4 weeks. If you look at the short-term time frame, you can see the last 4 weeks generally higher. Some weakness on Friday, but still in generally an upward trend, not a strong one, kind of neutral looking. And if we look at that 3-year chart, it does look like it's sort of catching its breath after this parabolic run higher. I think Bitcoin's likely just to go sideways in the near term. All right, let's look at the most important chart, the bond market. TLT is the US 20-year Treasury bond ETF. You can see the general trend is down, which means the general trend for interest rates has been up. We all know that because interest rates are much higher now. The market hoping, perhaps praying, that interest rates will start to drop. Well, for that to drop, we need the bond market to go up. And we had the bond market make a pretty good surge for 4 or 5 days right here. But then look what happened. That weak jobs number came out and it broke that very short-term upward trend. The bias generally is still up, and I think that there's a good chance we sort of still hang in there. The US Fed makes a decision on interest rates on Wednesday this week. And so they may not lower rates, but they may give an indication that they're thinking about lowering rates at the July meeting. I don't think the bond market has priced in a rate decline, and the bond market's usually pretty good at predicting that. So I sort of lean towards not getting a rate decrease on Wednesday, but it's certainly a possibility, but more likely in July, and we'll have to see what the comments are, but that could be a catalyst for some volatility in the market this coming week. So my ratings then, US large cap stocks, bullish on both time frames. NASDAQ, bullish on both time frames. Small cap stocks, neutral. Canadian stocks, neutral on both time frames. Gold and oil, bearish in the short term, but still neutral long term. US dollar, neutral on both time frames. Short term, bullish on Bitcoin, but neutral in the long term as it's sort of catching its breath after a strong run higher. And I've raised my ratings on the bond market to neutral, which essentially means a little better outlook for interest rates going down in the near term. All right, let's talk about the trade of the week, and it was the hottest stock of the week, and that is Gamestop. And I want to show you one of the trades. I traded the stock a few times last week, but this is one of those trades. I bought Gamestop on Thursday. It's very abnormal, very liquid. Those are the two things that I love. Very abnormal, in other words, the volume is much higher than usual, and very liquid, meaning there's many people trading it. So lots and lots of trades. It was trading well over 1 million times a day on some days last week. The only one that was maybe higher was Nvidia on some of those days. So it was really the most actively traded stock of the week. What I like to see is one of these abnormal stocks go into a predictive price pattern. And the predictive pattern on GameStop was what's called an ascending triangle. If I draw a line across the bottoms, you can see, if I can draw the line properly, that bottoms are rising. When bottoms are rising on a chart, it means investors are optimistic. When tops are falling on a chart, it means investors are pessimistic. So we had optimism building. This is on a very short-term 1-minute chart. This is Thursday. And sideways trading action. And then my action candle indicator firing right there. You can see there's a little yellow dot on my chart. So that's what I call my action candle. It looks for statistically significant abnormal volume and abnormal price movement. It's a sign that the buyers are coming in aggressively. So I developed some math, had it programmed into TradeStation, and I monitor the entire market looking for abnormal activity, looking for the action candle. And that's part of our service at Stockscores called Active Live. You can learn more about that at my website, stockscores.com. So that's the signal to buy. And the entry point, 34.77, the stop loss, 32.78 or 76. And you can see it made a quick run higher. And I sold it right here because the stock went parabolic. So this is another important lesson. When trends go parabolic, sell them aggressively. So anytime the trend is a curve, okay, you have a linear trend line like this. That's if the stock is in a linear trend, that's orderly. When they go parabolic, that means they're a bubble waiting to burst. And so I get a much more aggressive with my exit when that happens. So, in and then out in here somewhere. And then I wait for the pullback to the trend line. I can draw a little line across these bottoms and essentially coming back to the trend line. And then it builds. This is another important concept. If you're looking for a reversal, wait for the downward move to be broken from a rising bottom. And so that was the second entry there, which I held into the close and actually into the really hot action in the aftermarket. Unfortunately, I didn't sell in the aftermarket. I had to sell the next morning when the stock gapped down, and boo-hoo, a lot of those profits were lost because of what we talked about at the top of the video, that ATM financing, which was a big surprise, especially since they had just done one a couple weeks prior. But hey, that's trading. That's why we don't put a lot of capital into any one trade. We spread our capital out because number one goal in trading, capital preservation. Hope you've enjoyed this week's video. I'd really appreciate it if you would subscribe to the channel. It helps to have more viewers. It gets the attention for the video much better. And I like to do this every week to lots of people, teaching people how the market works based on some of the things I've learned over the last 30 years. If you've enjoyed it, click on the like button, subscribe, and most importantly, trade well.